What is going on, guys? Good afternoon. It's your favorite mortgage lender, Del Kwame, Got Mortgages, coming at you guys on a Tuesday. I wanted to wait today, just like I did last week, even switch some of these days now instead of Mondays, doing them on Tuesdays because so much data has been coming out Tuesdays the last 2 weeks, right? Today we got an update on the JOLTS report, job opening and labor turnovers. We're going to go over that in detail. What were the findings on that? Last week, we know we got readings in regards to the PCE report, personal consumption expenditure report. Of course, we'll dive through that, and then we'll take it from there. First thing we're going to start off, I'm going to share my screen like we always do and start diving in heavily in regards to what is happening last week with the market and what we really anticipate. Really, this is probably one of the most critical weeks, I think. It's going to set the tone into 2025 and really kind of give us an idea of what the Federal Reserve's mandate is going to be heading into their next Fed meeting, which is, coming up in less than essentially 2 weeks. So diving in further, I really want to cover first last week's stuff, right? We did see that inflation had significantly slowed down. We saw some progress on that. We're seeing that core PCE, it's pretty much flat, right? We've been between 3% to 2.8%, which is great. Again, seeing that comparison. Now, the one thing that is interesting to see is, remember, we're always replacing 2 years of data. 12 months of data. When we're replacing that data, if we look in the last 3 months, inflation actually ticked up a little to 2.7. In the last 6 months, it ticked down to 2.32, with the core kind of coming in at only 8.3%. So again, the bottom line, inflation, although it is slightly moving in the opposite direction, that increase really comes from what we're replacing last year when inflation was super, super low versus what the expectation is as we're going into this current months. We did also see, again, home sales ticked down, which was kind of expected. Remember, it's lagged on data, about a month lag. We knew this was going to kind of come mainly because we saw that the hurricanes had a massive impact on that. And then we also saw some inventory. This is the part that I've been sharing with some of our partners on these calls. Inventory is starting to tick up finally, right? And it is typically common that we see inventory kind of tick up around these times where it tends to kind of sort of quiet down just a little bit. Really interesting to see what the mandate is going to be as interest rates slowly eventually go down, which we're going to talk about in a few seconds. But inventory, of course, taking an impact. Mortgage applications are up. I think I was reading almost 50-something percent, 56% in terms of year over year. And refinances are up 119%, which is awesome. Now, pending home sales, when we look at pending home sales, you guys will see 2023, again, we saw roughly about 76.5 million. We are now seeing close to 77.4, again, being the consensus of that number that we really want to hit, right? This is the part that is also super critical for us to look at, which is home price appreciations. When we talk about home price appreciations, home values are consistently going up. September, they jumped up 3.9% year over year. Of course, a little bit of a slight slowdown, not necessarily the worst case because interest rates obviously ticked up. But the importance of this is to show you that even though we still saw over 45 to 50% of appreciation values, we're simultaneously seeing a lot of different seasonality in terms of factors and what truly comes into play when we're looking at the numbers, right? Third quarter GDP, also known as gross domestic product, this monitors obviously how the economy is doing. Seeing that a lot of the spending is coming from consumer spending. I think we saw that consumers spent, I don't know what the math was, I think it's $100 billion. I could be wrong. Don't quote me on this. In regards to how much people spent on Black Friday and just as much as what people spent yesterday on Cyber Monday. It's funny, over the last 2-3 years, I'm not doing the typical runs when you were a kid at Best Buy and trying to buy electronics. Now it's running to buy business cards and marketing material and gear and all that stuff that we can obviously give away, which I was joking about today. Continuing jobless claims, again, continue to rise. It's great. We saw, I guess, 1.9. We creeped up into that 1.9 million, showing that people are still receiving their benefits even after they file their initial claim, which is super interesting to see. Okay. Now, when we take a look at, we're going to look at the JOLTS report, like I was sharing with you. It came in today, fresh off the press. The quit rate increased from 1.9% to 2.1%. Again, bouncing just a little higher from where it was the lowest levels since 2015. I mean, people are slowly, maybe inclined to quitting a little bit more. Not necessarily the low quit rate, just kind of showing that companies are probably doing a little bit more of a better job of getting poached. Hiring rate dropped from 3.5 to 3.3, again, which kind of is in line to where it was prior to COVID. And leisure and hospitality just showed increases of 120. So again, looking at that vacancy rate, when we talk about the unemployment ratio, that's very interesting to see. Home price index, if we see, it was actually stronger at only 0.1%. Home prices, once again, up 3.4% from what it was the prior month. And then you can kind of also see in terms of the rental market just slightly down at just about 0.5%, 0.6% year over year. Okay. Where are we doing on interest rates right now? If we take a look at the market, you will kind of see 12/1/2024, 20, 12/1/2023. Pretty much kind of right in line to where we started the year, right? I was sharing this earlier with somebody. Basically around January 9th, January 10th, kind of where we're at right now, right? So really been battling. Obviously, this year was a little bit of a battle, up down. And we saw a little bit of signs of positivity during August. Then the Fed cut. We saw a jump. We saw a little bit of a decline. Now we're kind of slowly on that consistent decline, which is great. So super important that we continue monitoring this stuff. I did want to share some scenarios that we didn't get a chance to cover earlier. Really just in regards to the expectations with some clients and just some interesting scenarios that we're seeing. One file client proved with a different institution, but they ran into issues with the bank. There was crazy mold in the basement. I mean, like crazy mold. We had the client actually go ahead and address the mold in advance prior to the appraisal. It was all along the basement. We had it removed. We had the sheetrock cut. We had the client pour some bleach onto it. This is actually the client, the seller. It's a sheriff sale. Push it all through. Client is now clear to close, ready to close sometime this week. We had a different consumer who actually was looking at a property. They are now also clear to close. And honestly, as we were going through it, they had the inspection, and I can just tell the clients just did not want the house. They were just in no way interested in buying the home, and that's okay. They started talking ill about the house. Hey, the rooms are small, this, that. I immediately said, hey, totally get it. Let's keep it moving. And unfortunately, they felt that the real estate agent was a little pushy, which I really don't think she was. I think she was just setting the tone. They ended up finding a different house, using a different agent, which was unfortunate. And then we just got the clear to close for them. And there's also set to close sometime this week into next week while we wait for the seller. So it's just hypercritical that whether you're an industry professional or a client, we're truly listening to what the clients are looking for. We're truly getting a firm understanding of your monthly payment, your cash to close, and what the proper expectations are for them to close. And once we have that, I think it's easier for us to strategize and see what the proper expectations are. Okay. That's about it. If you guys have any questions whatsoever, as always, feel free to visit our website, gotmortgages.com, and I will catch you guys next week. Have a great day.